13 tax moves that will save you serious money in 2026. Have you ever felt like no matter how hard you work, no matter how much you earn, something still feels missing? Like your money comes in, but doesn't stay. You look at your bank account at the end of the month and wonder, where did it all go? And the truth is, it's not always because of your spending habits. Sometimes it's because of something most people ignore: taxes. Not understanding taxes is one of the biggest financial mistakes people make. And in 2026, as rules evolve and financial awareness becomes more important, the gap between people who understand taxes and those who don't will only grow bigger. Some people will keep losing money silently, and some will quietly save thousands of dollars every year. The difference? Knowledge. Today, you're going to learn 13 powerful tax moves that can legally save you serious money. These are not shortcuts. These are not tricks. These are smart strategies used by people who understand. Let's begin. Move 1. Understand your tax system. The U.S. tax system works differently. Instead of old and new regimes, you choose your filing status and tax setup. Most people don't compare them properly. They just follow what others say or stick to what they've always done. But this is where you lose money. Some deductions and credits can reduce your taxable income. So which one is better? It depends on your lifestyle. The key is not choosing blindly. The key is calculating both options every year. Because your income changes, your expenses change, your investments change, and one small decision here can save or cost you a lot. Move 2. Max out tax deductions and contributions. This is one of the most powerful opportunities available to taxpayers, and yet many people don't fully use it. You can reduce your taxable income significantly using retirement contributions, investments, and eligible expenses. Now here's where it gets interesting. You don't just save tax, you build wealth. You can invest in options like retirement accounts, mutual funds, life insurance policies, and even repay your home loan principal. But here's a mistake most people make. They rush at the end of the year. They invest randomly just to save tax. That's not smart. Smart investors plan early. They choose investments that not only save tax, but also grow their money over time. Because the goal is not just to reduce tax. The goal is to increase your net worth. Move 3. Don't ignore health insurance. It also helps you save tax. You can claim health insurance tax benefits for premiums paid for yourself, your spouse, your children, and even your parents. And if your parents are senior citizens, the deduction limit is higher. So you're not just protecting your health, you're protecting your finances and saving tax at the same time. Move 4. Claim housing benefits properly. If you're living on rent or paying for housing, this is a big opportunity. But most people don't use it properly. Some don't claim it at all. Some make mistakes in calculation. And some don't keep proper proof. To claim this correctly, you need to maintain proper records. You need to understand how your salary structure works. And you need to calculate based on actual rent paid, salary, and city. This might seem like a small thing, but when done correctly, it can significantly reduce your taxable income. Move 5. Use capital gains smartly. Investing is great, but every time you make a profit, you may have to pay tax. That's where smart planning comes in. If you have losses in some investments, you can use them to offset gains from others. This reduces your overall tax liability. Even better, if you can't use the loss this year, you can carry it forward to future years. This means your past losses can help you save tax in the future. Smart investors don't just focus on returns. They focus on after-tax returns. Move 6. Home loan benefits. Buying a house is one of the biggest financial decisions you'll make, but it also comes with tax benefits. You can claim deductions on the principal repayment and interest payments, and on the interest payment under another section. This gives you a double benefit, but you need to keep proper documents, loan statements, interest certificates, and repayment details. If you miss these, you may lose the benefit. Move 7. Track your expenses. Most people don't track where their money goes, and that's a problem. Because if you don't track expenses, you can't claim deductions. If you're self-employed or freelancing, Many of your expenses can be deducted. Things like internet bills, software subscriptions, travel, and office expenses. These reduce your taxable income, but only if you have records. So start tracking everything, because small expenses, when added together, can make a big difference. Move 8. Education loan benefits. Education is an investment, and if you've taken a loan for it, you can get tax benefits. You can claim a deduction on the interest paid, and there is no upper limit. This is one of the few deductions without a cap. So instead of worrying about the loan, use it wisely. Plan your repayment and tax savings together. Move 9. Plan taxes as a family. Tax planning is not just an individual activity. It can be a family strategy. You can legally transfer assets to family members. You can invest in their names. You can use different tax slabs. This helps in reducing the overall tax burden of the family. But it must be done legally and carefully. Move 10. Don't miss advance tax. If you have income beyond salary, like freelancing or business income, advance tax is important. You need to pay tax in installments during the year. If you don't, you may face penalties. Many people ignore this and end up paying extra. So plan your income and taxes in advance. Move 11. Use tax-saving investments early. Most people wait till the last month of the financial year, and then they panic. They make rushed decisions. They choose wrong investments. Instead, start early. Invest monthly or quarterly. Give yourself time to think and plan. This leads to better financial decisions. Move 12. Use a CA or software. Tax laws can be complex, and small mistakes can cost you money. That's why using a tax professional or reliable software can help. They understand details you might miss, and sometimes one correction can save you thousands. Move 13. File your return on time. Filing your return on time is simple but very important. Late filing can lead to penalties. It can also cause stress and complications. Filing early keeps things smooth, and sometimes it helps you get refunds faster. Now, let's step back and understand something important. Taxes are not designed to punish you. They are designed to be managed. People who understand the system use it to their advantage. People who ignore it end up losing money. The difference is awareness, and now you have that awareness. So don't ignore these strategies. Start applying them. Even if you start small, it makes a difference. Because in the long run, it's not just about how much you earn. It's about how much you keep. And the people who win financially are not always the highest earners. They are the smartest planners.